All right, guys, good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is 9 a.m. Eastern Standard Time, first of the month, Thursday, December 1st, 2022. We've made it to December. Hope everyone's having a nice morning. Welcome aboard. Let's go ahead and get to work. Bottom right-hand corner of your screen, little black logo, click on that. Turn notifications, subscribe to our channel. Make sure to hit that like button if you like these videos. And let's go ahead and get to work. All right, first things first, let's go ahead and bring up the S&P 500 on the future side. And then we could start taking a look at the rest of the market. Let's go around the horn. Dow futures up 35 points, Nasdaq up 30, S&P 500 up 0.32%. We had some economic data. We'll go over that here in a second. Russell 2000 futures up 0.33%, 1893. Crude oil up 2.46%, 82.53 a barrel. Gasoline futures $2.41, up 1.30%. 10-year yields are tanking this morning. Now at, we're actually bouncing a little bit. 3.6%. We hit as low as 3.56% this morning. The dollar index right around 105. We're going to chart that as well, 0.86%. The VIX is slightly green, 2060. Gold futures 2.55% to the upside, 1804. Thank you, dollar. Silver as well. So the commodities are bouncing on the dollar going down. Copper is green as well, nearly 1%. Euro dollar, we've talked about that correlation. Euro's going up. That means the dollar's down. That means equity's gone up. And we saw what happened yesterday. Up 91 pips, 104.96, 136.25 on the dollar yen. That's down 1.46%. If you're an old school Forex trader, you remember that yen being strong is more of a risk off. That's changed now with the dollar. So again, the yen going down is a good sign for risk assets, at least temporarily. Pound dollar, that's up 16 pips, 122.20. Bitcoin futures 16,920. Brazil approved accepting Bitcoin as legal tender for payments. 1271. That was yesterday. 1271 on Ethereum, down 1.66% this morning. Okay, so yesterday, if you guys remember, I did have SPY puts. Took a hit on those. Again, I was expecting that 3,900 retest. Powell started speaking. Soft landing, he's talking about slower interest rate hikes. Again, still hawkish, kind of, but again, that soft landing still working out. Remember, we talked about the charts here. So let's go ahead and go over it again. That rising wedge finally broke out of it. If we would have continued, it would have been maybe a little bit worse, but we finally broke out of it. That's a good sign. Now we're at 40.85. That's a 61.8 Fibonacci retracement. If we want to go and take a look, actually, if we could do, let's actually redo the retracement levels together. So we'll go ahead and redo the fib retracements from the bottom, 35.02. So far, that bottom call looking pretty good. That's for sure. Could be that, I'll just put it right here, 48.08 and a quarter. I'm about a couple points. So really the next level of resistance is 41.35 or 41.55. That's right above that trend line that we've rejected every single bear market rally. But we're above the 200-day, big level. I talked about that on Instagram. First time we've been above the 200 MA since on S&P 500 since April, settled above it. You could see that we kind of wicked above it back in August, but we are now settled above it. So again, we still want to get above 41.35. That'll show that the break is out, that breakout, and then the Santa rally can be in effect. We talked about this on a couple of weeks regarding the newsletters and on the blog. Really, the target, again, the bull target is 43.09. That's the retest of the August highs. Towards the end of the year, we know with the Santa rally, we know that we have seasonality when it comes to December. But again, you want to get above 41.35. The good news is that we have the actual backdrop on the macro side to assist this idea. Now, again, I did think we were going to get to 3,900. We got to 3,950. That seems to be that support. Fine. The options took a bath after a Powell. That's okay. I took a hit on my Apple runners too, but again, I closed that for a gain. So I went long on Google with the team. We should be able to catch that this morning as the dollar is slicing 104.99. So again, the dollar is key. We want that dollar to break below that 200-day, which it did. But again, this could be support as well. So again, just keep an eye is all. Let's see if we break down nicely on that. 10-year yields, you could see below 36.57. That was the level we're looking for. Now we're looking for that 100-day moving average to test on the 10-year yields. 34.88. That's what we're looking for. Again, this is nothing new. We knew that we were going to get this head and shoulders pattern. You could see down here, we should extend a little bit more, 34.88. So, I've said that 3,500, 3,600, that 200 weekly moving average was the bottom. Again, I would love to play calls here, which I am, and see if we can get that extension. But again, 41.35 being resistance now. So again, we probably have about 40 handles. Maybe we could squeeze, we can get out, maybe Google at the open if we get a continuance. Looking at Apple, the 150 calls look decent. We just filled that gap, but again, we're pretty close to that. If we go to Microsoft, Microsoft is on the move. Let's take a look at it together. We'll go to the daily. And you could see that we're above the 100-day. You do have a gap to fill at 265.09. That is going to be my target. I'll probably look for next week calls on Microsoft. So again, look at Microsoft. That's pretty much what I want to stay focused. Look for that turnaround play in those tech names, because lower rates, like we see on TNX, is going to bolster those tech names. I had a question regarding Spotify today from Investment Club, and they were asking if it was worth a buy. Just because you like the app, I learned this lesson with football TV, and I love football TV. I've had football TV now for about 3 or 4 years, the actual platform, but the stock itself is not the same as the app. So kind of understand that. So if rates go down, then Spotify, football TV, and these names are going to push higher because they do better in a lower yield environment, lower interest rate environment, so they can borrow in order to grow. Remember, these are growing companies. They still need debt in order to expand their operations, hire more staff, whatever. Again, that's more accommodative. We're not at an accommodative phase as of yet, but again, the Dow Jones Industrial Average now in a bull market. Interesting, right? We're starting to see kind of that turn. So, do we have any downward? Let me see. Do we have any downward risk? Of course we do. But you could see here that breakout above that August high. So, kind of the Dow is leading the way. But again, the Dow is a weighted average. There's a lot more value names on that. UNH being the big part of it. UNH, I love that company. Love that stock. But again, if you look at the S&P, that's more skewed towards tech. Apple, Amazon, Tesla, the names, the Google, those names. But the Dow Jones is a little different. But again, it is breaking out. It is starting to move. Do we get that continuance? Do we get that Santa rally that we've been talking about on the newsletter? Well, let's go ahead and take a look here quickly. I just want to show this before we call it a day. Another headwind, dwindling list of reasons to be bearish, blah, blah, blah. Take a look at this, guys. After 7 months, the S&P finally closed above the 200-day moving average. Let's see what continuance we have. So let's go through all the single flips in terms of cycles. These are all bear markets. These are all recessionary times. 2009, 2002, 2003 is more of a slowdown. 1982, we know about that. 1970. So again, we broke above the 200-day. Let's see the average gain after that. In 1 month, up 1.6%. If we get a gain of 1.6%, just on average, mind you, we are now, let's call it 40, we got as high as around 40.95 percentage calculator. We'll go, I think it's 1.6%. What is it? 1.6%. We'll go to the average. So we'll call it 40.90. Call it 40.95. Let's see. 1.6% of 40.95. Okay, sorry, 1.6%. Sorry, 40.95. I'm pretty lazy. So another 65 points, again, on average, again, just going by the average here, 1.6% from the closing of above the 200-day. We did the math, right? We are now at 65.52. That's added to top of it. So 40, let's say 40.95 plus 65 gets us to 40.50. That's right there at that 50% retracement on S&P 500. That's above that trend line. Again, if we just average what we usually average, again, that doesn't mean it'll be for sure. But again, if you get that 1.5 or 1.6 point move, you're going to get above 41.55, 41.50 or so. That's above that trend line. That's what we want to see. In 3 months after that, the average is 6.7%. How about 6 months from now? 12.2%. How about 1 year from now? 18.8%. Let's do the math. 18.8% from that level that we are. You add 769 points. Let me get my calculator. That I don't know how to do in my head. 769 points plus 40.95. You'll be at 48.64 by year end if we have the exact same setup in terms of averages, the law of averages. 4,800. Does that mean that we get to all-time highs next year? Interesting. That would be very nice, wouldn't it? Could we get there next year? Well, that's why we're here, and that's why we play the game. That's why we watch. So here it is, right here, guys. Yeah, it's on Instagram as well. If we just average what we do after we break the 200-day, that's 18.8%. That would get us to 48.64. 48.64. That would be amazing. The question is, do we get there? How soon do we get there? Can we get there? So many questions, but we'll be here every day to help you guys out. How great would it be 12 months from now? You're back at all-time highs. Hopefully. S&P 500 just closed above the 200-day for the first time in more than 7 months. Look at this chart every time the signal has happened. Again, 2000 and 2001, you could see that, 2009. But again, pretty close. You could see that's that marker where we start pushing higher. Should we run out and buy the dip today? Not exactly. Let's see if we break out of that trend line here, and then we could see where we go. But again, you already know we have been putting ourselves, buying stocks off that low, bought some TQQ, bought some Target, SpyG every week, still buying crypto. So again, it could be that the worst is over, like we've been saying. But again, you have your numbers. Let's see where we go. That doesn't mean that's for sure going to happen, but it's still a trader's market as we speak. So we'll leave it there. I'm going to leave you with some optimism. Is that December, as we know, seasonality is pretty strong. So again, I wouldn't be surprised if we get to 41.55. My target, bull case, again, best case scenario gets us to 43.09, but really more than likely we'll probably get to around 41.50 or so by the end of the year. Thoughts on VIX as low as SPY's new thoughts on VIX so low and VIX at SPY at new high. Excuse me. The VIX support is 1944, so we got a little more to go. Keep in mind, a lot of people traded next day S&P calls or S&P puts. It's been that zero DTE. So the VIX has been a little bit decoupled from what reality is. But again, obviously, when you have some breakouts here, you expect the VIX to go down. We still got a little more room. So again, 1944, that should get us to around 4140-ish, 4155. That might be the level we're looking at. So the VIX is doing exactly what we expect in terms of the market. Is not that much red, but again, 1944, that's your support. More than likely, you're probably buying protection there if we go hit there. So we'll keep an eye. Again, I tried to do puts last week. I hit puts on Apple this week, but SPY, try to get that 3,900 retest. I hate to say that I'm happy to be wrong, but sometimes things work out for you. It just sucks that we lost that trade, but we'll make it back with Google and some other things as well. So my goal is to ride this market as much as I can, up or down. If we can get to around that 41.30 level, 41.45 level or so, we can definitely do some damage today and running into next week because the dollar is tanking. That's what we want. So it should get very exciting here. The bull run into December. That's what we expect. In 12 months, maybe we get to 4,800 based on the averages, based on breaking the 200-day. Wouldn't that be nice if we get there? Guys, the worst might be over. We're not sure yet, but I called the bottom. I said we could retest by next year. But again, yesterday's action really made us a little more confident where we are moving forward. So soft landing. Let's see what FOMC does. 50 basis points is the expectation for, I think, next week as we get FOMC. Let's go and take a look at that. Next week, do we have that? No, we have it in 2 weeks. 2 weeks, we have our FOMC statement, interest rate, and CPI. The week before, which would be next week, we have OPEC meetings, we have PMIs, and we have PPI on the 9th. So again, not a ton of stuff to move forward. Maybe you want to go ahead and take a look at some next week calls since we won't have that much economic data to get in the way. But as we get into the 13th and the 16th, literally that week before the holiday, boy, does that remind me of 2018 when Powell lifted rates and we tanked. Oof, ugly. Been there, done that, got the t-shirt. It's 2022. Let's see what we get moving forward. Have a great rest of your morning. I will catch you guys tomorrow for the morning note. Have a great rest of your day. We will see you then. Cheers.